Hey everyone, welcome back to Gold Predict. In today's update, I'm going to share with you why I think gold is at one of the most important bottoms we've seen in a while. And down here I wrote, this is probably the most compelling gold chart I've seen in a long time. Once this pullback here, the final pullback E is complete, and I think we're really, really close. I imagine the next move will be a breakout to new all-time highs into 2024, and I have a target of between $2,800 and $3,200. So I'm just going to call it $3,000 plus or minus $200. So we'll see. We got some interesting charts. We're going to blow through a lot of them here today. So sit down, buckle up, and let's get into it. Okay, first we got this is the daily gold chart. So, gold has an intermediate cycle that has been lasting roughly 4 months. So, about every 4 months, prices make a bottom here. So, we had one here in July, and then I don't know, 3.5, 4 months later, we had one in November, and then a few months later, we had one as we split February into March. And I think we are very, very close to another intermediate cycle low right now. If you notice here back in February, prices tagged the 200-day moving average, and they hit it here again at $1,900.60, and that could be the bottom. It's hard to say because there's so many things dependent on what the Fed does on July 26th. Are they going to hike again? Are they not going to hike? Are they going to remain on pause? Nobody knows. So gold could chop around here a little bit, but what I'm looking for is we have a nice descending wedge pattern. And if prices close above this progressively, like 2 days in a row, I'm going to consider that a breakout, a temporary breakout, and then I will be a little bit more confident in calling this the cycle low. So, why this is exciting to me is if prices did bottom here, then I think within the next month or two, we will probably see a breakout to new all time highs. That's my guess. Again, it's hard to know what the Fed's going to do, so prices could chop around a little bit longer than I'd like. But ideally, if this is the cycle bottom, then this should break to new highs. And once I think gold gets above 2,100, I believe it'll probably be off to the races. There'll be some short covering and things like that could see an explosive move. All right, now let's move on to silver. Okay, if you don't know me, I am a huge fan of silver, and longer term, later this decade, maybe around 2030, maybe as soon as 2028, I think we could see prices nearing $300 an ounce. I know that's kind of ridiculous, but I believe this will be a decade of scarcity, and silver is a critical resource when it comes to the green economy and photovoltaics and all the solar panels and all this stuff. So it's so critical, and it's rare. And currently, the gold to silver ratio I think is 80 to 1, which is ridiculous. So eventually, this will be repriced, and I think once it gets into an explosive bull market, prices could soar. Short term, I believe prices are probably putting in a local bottom with gold. I was kind of surprised that silver bottomed a little bit earlier than gold. That's not usually the case. I was kind of expecting maybe a retest of the trend line, which is still possible. But short term, if we can break out above this downtrend line, get a couple closes above that, say a couple closes above $23.50, I would be more inclined to call this a cycle bottom at $22.14. Overhead resistance, we have some here at 26.50 roughly, and then above that at 28. I'm not sure when silver is going to really do its move, but it might not be till next year, 2024. But I think if gold reaches my target of around 3,000, I see no reason why silver can't approach $50. All right, now let's get on to platinum. Okay, platinum. I love platinum as well. I believe it's incredibly undervalued. It's $934 an ounce, which is, less than half the price of gold. Typically, platinum is double the price of gold. I've said before that the platinum eagle coin has a $100 face value, whereas the gold eagle coin has a $50 face value. So the U.S. Mint agrees that prices are typically double the price of gold. So I think it's a good deal. I do like the Platinum Eagles. I like Canadian Maple Platinums as well. And as far as a bottom, prices made a slightly lower low. This kind of looks like an expanded flat in Elliott wave terms, and I think prices could go, but really, it's not going to get exciting until we start making higher highs, and that means prices would have to get above 1150. And as we head into recession, it's a little more up in the air as to how platinum will react, but I do see when gold breaks out above 2100, I don't see how platinum doesn't start to follow. And like with silver, it gets a mind of its own, and it can have explosive 5%, 6% up days. And longer term, I do believe platinum will at minimum reach parity with gold. So I think it'll be a 1-to-1 ratio. And I would not be surprised, and I'm kind of banking on it, returning back to a 2-to-1 ratio where platinum is twice the price of gold at some time. Later this decade, ideally. All right, now let's move into the miners. Okay, we have a daily chart here of GDX. GDX, it retraced quite a like almost $8 from the high here. It looks like a nice ABC pattern. I kind of thought we would see a more of a measured move. I was expecting, usually for a measured move, A has to equal C. So I thought we might come down here to retest it, but we haven't. So, and the other thing I was looking for was perhaps we have a price gap here at $28. I thought maybe we'd come down to close that, and we haven't done that either. So that could be a positive sign if prices are showing relative strength. Near term, I would like to see a close above last week's high. So call it $30.77. If we can get above that, if we get a robust close above that, I would be excited, and I would consider this a cycle bottom. And I think this next leg higher, if gold goes where I think it's going, miners could play catch up, and they could really, really start to soar. All right, let's move over to the juniors now. All right, I like juniors. I think they're incredibly undervalued. Up here in the top panel, we have a positive divergence in the MFI indicator, the money flow index. So it's that's a good sign. Usually that means that momentum is slowing. So what happens is prices made a lower low, but the MFI didn't make a lower low. It made a higher low. So that's what's called a positive divergence. And that just means the trend is probably getting ready to reverse. Now, these can last a lot longer than anyone expects, but on a really short-term positive note, we are currently above the trend line here, and we might have a breakout. And if we get a close above last week's high, which was $36.66, which is where we are right now. This is at 10:02 a.m. on Tuesday, July 11th. If we close strong above this, I think we could... this would be, I would call this a cycle low, and prices could start to soar here. I'd like to see an up gap coming out of a bottom. I'd like to see an up gap. If you look back here in March, prices bottom, made a double bottom, and then we had a nice up gap. And if we get a nice up gap, then I think that could be the onset of a stronger advance, probably to a higher high. So longer term, I think gold miners in general are incredibly undervalued. Silver miners as well are incredibly undervalued. And I think they could go, usually gold miners will do a 3-to-1 to the price of gold. So if gold is up 100%, then miners could rally 300%. So, and I think they'd have huge margins. Longer term, my gold target, I'm looking between $8,000 and $10,000 later this decade, maybe around 2030, when I think we could go into a prolonged global depression. But that's for another day. But I think gold miners have a long ways to go. All right, let's move on to the silver juniors. Okay, now we're looking at the Silver Juniors ETF, SILJ. I'm a big fan of silver, like I said, and I think, unfortunately, the Silver Juniors have been a kind of a dog of late. They're one of those assets that when they perform poorly, it's bad, but when they move, it is crazy. I'm not expecting that right now. We have a long ways to go, but eventually when silver does break out above $50, that may not be for another couple years. But once it does get above $50, I think that silver miners are going to explode. Prices are trying to make a higher high above last week's pivot. So if we can close above $9.62, a strong close above that, I think that would indicate a cycle low. But then we got to get back above the 200-day moving average. But the real breakout will come once we get above this downtrend line. You can't see it. The chart doesn't go back that far, but this goes for about 3 years. If we can break out above this, then I think we'll be on the verge of a really, really strong move. So that's going to be it for today. I covered most of the gold and mining charts. I think precious metals are very close to a bottom here, and I'm expecting huge moves later this year and into 2024. You know what? Before I leave, I'm going to run you back to the initial chart so we can go over that. All right, just to recap, gold tends to peak about every 4 years. It's usually before a presidential election, generally because there's so much uncertainty about what the next 4 years are going to bring. This next year's presidential election, I imagine, is going to be crazy. So that's why I believe once we get above $2,100, that's going to be new all-time highs for gold. And I think we'll see probably close to 3,000 roughly in the next 12 to 15 months, which, that's a 50% rally from here. That's a pretty bold call, but that's what my technical analysis is showing me. We'll see if we get there or not. But from there, we'll see what we have. An 8-year cycle low usually follows the 4-year presidential cycle. So I think we'll see a sharp pullback probably into late 2024, early 2025. My plan is to hedge my positions and maybe sell some positions around here, and then hopefully re-enter when prices are kind of do this. You see we got an A, B, C, D, E. This first A wave down is usually really sharp. So we could see a 20 to 25% decline, and miners usually fall much further than that. So I don't want to be a part of that. So I'm going to try to take profits here and at least hedge my positions. If you like this content, hey, cool, thank you. If you're still listening, holy moly, God bless you. I appreciate it. And we'll go on to do some more videos. Have a great day, and God bless. Bye-bye.